Aly-Khan, stocks hit a
Morning.
17-month low yesterday. Inflation numbers shows prices rose to 15.5%. We saw a weak start to the trading week yesterday. Was that a broad-based sell-off, or were there any underperformers in the market?
Well, what's concerning me is the illiquidity that we're seeing at the bourse now. I mean, we traded less than $1 million. It was probably the lowest volume day at the Nairobi Stock Exchange yesterday, and we're getting the market moving on very low volume. And so, in this sort of environment, I'm uncertain as to when the bottoming out process will happen. There are clearly lots of very cheap shares, but we've been hit by a perfect storm of high food prices, the drought, a runaway inflation rate, a shilling that's fallen out of bed, and a lot of noise coming out of the Monetary Policy Committee, and a lot of adversarial comment, none of which is, I think, helping the bourse at this point in time.
I'd like to touch on some of the comments from the CBK's governor in response to that criticism surrounding the decision to keep the key lending rate on hold. He said it was because of supply side issues and that they had limited ability to influence suppliers. He said that analysts who were criticizing the decision were not looking at the economy from a neutral perspective. He even took a bash at the media, saying that headlines about food and power shortages have fueled inflationary expectations. You've had a week to digest this decision. Could it not be argued that any increase in the CBR would have put more pressure on suppliers and then had more influence on prices, which have put upside influence on prices going forward?
Well, I think let's start off with the nature of the debate that's going on now. It's become way too adversarial. I think the central bank is sort of dug into its bunker, and the current debate is actually very unhelpful. I think the central bank would be far better served engaging in an adult conversation with all these stakeholders who are actually disagreeing with it at the moment. Furthermore, I think I understand what the central bank is doing. They're obviously very worried about increasing interest rates on an economy which has already been hit by a triple whammy, which we've just discussed. But having said all of that, the conduct of monetary policy at the moment is not what people expect. I think the central bank would have been far better served by being more aggressive on short-term interest rates, by bringing the CBR rate closer to where the interbank rate is trading, and keeping it relevant. And I think that would have had the consequential result of flattening the yield curve and keeping interest rates, borrowing costs to the consumer lower. This current situation, I'm afraid, is going to steepen the yield curve, and it's going to make banks trigger happy about raising interest rates. And I think we're going to see a slew of interest rate hikes coming from the banks in the next 2 weeks. And that's the way I think the central bank should be playing it. Meanwhile, with respect to the shilling, I think it's a shoo-in for a new multi-year low. It traded 91.95 a few weeks back, which was a multi-year low, and I think we're going to trade through that because of the mixed messages, because of a runaway inflation rate, and we still have not hit a cycle high on this inflation rate. And really, if you've got a CBR rate at 6.25 and an inflation rate over 15%, you've got a very, very wide gap there, and there's no amount of justification that can justify it.
Let's take the discussion back then to the equity market, and of course one aspect to look at when analysing companies is a strong management team and credibility. Given the headwinds that the economy is facing at the moment, which stocks would you say have a strong, credible management team that is able to manage the economy and the environment that is presented with at the moment?
That's a very interesting question, and I think you have a very bifurcated stock market here in Nairobi. You have the big companies which are having to behave and act in a way commensurate with global norms. And then you've got some very esoteric small companies who have been behaving in a manner which I think has not been optimal. So with that, with that background, I would say clearly, I think the banks, something like KCB, the likes of Safaricom, these are managements who are very strong and reliable. You're not going to get any bad surprises, and they're going to do their level best. So I, for one, would be looking, like you're saying, I would be keeping an eye on exactly what the management are doing and whether they're behaving in, whether they're paying a healthy dividend in the situation when they can, what is the dividend to payout ratio, and all these kinds of things. But you raise a very valid point, and you've got to be extremely careful, especially with some of these smaller companies where you have majority shareholders who have behaved in the same way for years and years.
Which
and
companies
really, I think,
in particular would you be cautious about given their management decisions?
I would be very cautious about Samir. I would be very cautious about those sorts of companies. There are lots of issues which are now rearing their ugly head all over the place, and I would be very uncomfortable with that sort of with those sort of companies. I'm still wary about agricultural companies because I still don't think the management really gets the idea that they're in the business of raising shareholder value and raising the share price. And I would err towards the large, well-capitalized companies because they've got international shareholders on their register and they need to behave within the parameters that we'd expect anywhere else in the world.
Now, the Capital Markets Authority has put out a proposal for demutualization of the NSE. Could this help boost foreign direct investment into the Nairobi Stock Exchange and give it a much-needed boost?
Well, you know, the Nairobi Stock Exchange has been very dependent on foreign investment. I think the demutualization of the NSE is a very positive step. It allows, again, you know, what we were talking about before, and it brings more international management into the scenario. Whether it's going to be a catalyst for further investment, I'm not sure. But what it's going to do, it's going to allow some of the brokers to recapitalize themselves because they're going to earn a windfall gain from the sale of these shares.